Hi, this is Mike Lingle, broadcasting from New York City. And today we're going to talk about break-even analysis, and I'm going to keep this short just like I usually do. So break-even allows you to calculate how many sales you need to make in order to cover your cost, and from there you can build a realistic plan. So let's dive right in. And we're going to use a spreadsheet for this. And you can download this spreadsheet right off of the video, but I'll walk you through it. So first you got to figure out how much you're selling each unit for. These could be widgets, they could be apps, they could be whatever it is that you're selling, subscriptions. So let's say your average selling price per unit is $10. So if you have no cost of sales, and we'll get to that in a second, then your profit per unit is $10, which is just how much you're selling it for. Your other expenses would be salaries, rent, your office, your computers, your internet subscription. So we'll calculate that at $150,000. And so at $10 per unit, we'd need to sell 15,000 units in order to break even. And so where this gets, and obviously if you're selling something that's more expensive, like $100 per unit, then you only need to sell $1,500 to break even. Or $500 per unit, you only need to make 300 sales to break even. So now you can go figure out how to make those 300 sales. So this is great when you're thinking about your business and thinking about your pricing. You can do a little calculation to see what makes the most sense. So now let's talk about the cost of sales. And what that is that is what each unit costs you to make. And so how much does each unit cost you? It's also called cost of goods sold. So you hear people refer to COGS, and it determines your gross margin. We're not going to get too deep into that. But basically, we can go back to our $10 price here and factor in a $3 cost of sales. And now we have a profit per unit of $7. So we're not making $10 per unit, we're making $7 per unit. And now we need to sell 21,000 of those units in order to break even. Remember, if it's zero, we only have to sell 15,000 of them at $10 a pop. If it's $5, we have to sell 30,000 of them. So you can see your cost of sales really affects the performance of your business and how many units you have to sell. And again, investors and you are going to need a credible plan for how you're going to make that many sales. So let's stick with these numbers and let's look at the income statement. So in this scenario, $10 per unit, $3 cost of goods sold, $150,000 in expenses. You need 21,000 $10 sales, which gives you revenue of 214,000 minus your cost of sales at $3 per unit, gives you a gross profit of $150,000. Your expenses are $150,000 as we've discussed, and that gets you to zero. So that's your break even. If we bump it up to $5 cost of goods sold, now your revenue goes up, but you have to sell a lot more units. So you have to sell twice as many units using that same $150,000 of money for marketing, etc. So you can see your cost of goods sold dramatically affects the number of sales you need to make, as does your selling price. So the ratio is the same here, 3 to 10, but I have to sell a lot fewer units, and that may be easier given the amount of money I have to spend on sales and marketing. So what's a real-world example? I'm going to take an extreme example. Let's look at Ferrari. They sell really expensive cars. So in 2015, they sold 7,600 cars. They made $3.2 billion in revenue, and their cost of sales was $1.6 billion, which left them with $1.5 billion in gross profit. They spent about that much in expenses, so their net profit was about $5 million. And where this gets interesting is you can look at their break-even. So for those 7,600 cars, their break-even is about what they sold. Now their average sale price per unit is $400,000. Their cost of sales is about $200,000, leaving them about $200,000 in profit per car. So if they have to cover their expenses of $1.5 billion, they need to sell 7,600 cars. Now if you play with this, like what if each car cost them $400,000? Then they'd have to sell 110,000 cars. So that's obviously a lot of cars. Versus if it was only 100,000 per car, they could sell a lot fewer cars, less than 5,000. Or 50,000 per car, they would only need to sell 4,000. So you can see your cost, average selling price per unit, and your cost of sales dramatically affects your break even, and that dramatically affects your plan of how your company is going to succeed. So you can download this template from the YouTube site and let me know how it goes. I really want to hear from you. If you have questions, let me know. I'm happy to answer them. And thanks so much.